Unfortunately, I guess, to the extent that missiles fly, which I really hope they don't, uh, it will be beneficial to the oil price. If Israeli missiles hit Iran, it is not unlikely that the Iranians will attempt to shut down the Straits of Hormuz, which will deprive the Saudis of 60 or 70% of their revenues, which one could suggest could lead to hostilities not merely between Israel and Iran, but also between Saudi and Iran. And that would be a truly ugly circumstance for humanity and for the oil market. If we assume that somewhere in the world,
In the realm of oil and gas, geopolitical tensions can often cast a shadow over market dynamics, prompting questions about their impact and potential implications. Recently, in a discussion with Rick Rule, a seasoned expert in the field, the focus shifted to the unsettling prospect of missile activity between Israel and Iran. Amidst this uncertainty, Rule offered insights into how such events could reverberate through the oil market. So, stay connected till the end with Rick Rule.
the company underperformed a couple of years ago because I would suspect that they were deferring a little bit of sustaining capital investment, and they got an operating cost increase, which they've dealt with. Two, remember that they basically doubled the issued and outstanding to take over the assets around Yamana and took on a lot of debt. They have begun to do as they said they were going to do, which was sell some of the assets to Yamana that were not core to what they were doing, use that money to pay more care, love, and attention to the best assets. And they've been involved in doing that. They're driving their all-in sustaining capital down. They're driving their net debt down. They're driving their free cash flow up. And one hopes that as a consequence of lavishing love, care, and attention on high-quality mines, that their margins will increase with increasing metals prices because one hopes they'll be able to drive down their costs. If they're able to do that, they will deserve the four, which I suspect they'll do, irrespective of their ability to restart Guatemala or start Argentina. If they are able to do either of those two things, that's truly on the icing on the cake. Remember that either Guatemala or Argentina, either one, just one, has the ability to double the company's silver production. If they were able, by some quirk of fate, to do both, that would triple their silver production. And the market is giving them no credit for either asset. They have not come out with the reserve report. I'm amazed and delighted with the quarterly financials. If you strip out all the accounting BS, what matters is net cash at beginning of period versus net cash at end of period, and net debt at beginning of period and net debt at the end of the period. After you strip out depreciation, depletion, amortization, all that kind of stuff. And the ability that this deposit seems to have to churn out cash, and the discernible ability of the company to increase its net cash relative to its net debt is admirable. The difficulty is that I can't do a net present value calculation on the deposit if I don't know with some certainty the size of the deposit. The write down in terms of reserve and resources that they took was pretty staggering. They said at the time that they expected to be able to add back based on additional drilling, but they haven't, at least to my knowledge, reported it in a way yet that I can generate a net present value calculation. Unfortunately, I guess, to the extent that missiles fly, which I really hope they don't, it will be beneficial to the oil price. If Israeli missiles hit Iran, it is not unlikely that the Iranians will attempt to shut down the Straits of Hormuz, which will deprive the Saudis of 60 or 70% of their revenues, which one could suggest could lead to hostilities not merely between Israel and Iran, but also between Saudi and Iran. And that would be a truly ugly circumstance for humanity and for the oil market. If we assume that somewhere in the world there are world leaders with IQs north of 100, and hostilities are de-emphasized, the oil market will still do very well because irrespective of the missiles flying, the world, including the Iranians, are underinvesting in sustaining capital around their oil industry. The Iranians, the Russians, the Venezuelans, the Mexicans, all the world's geniuses are deferring sustaining capital investments to the extent of about $1 billion a day. This will continue to impair their ability to produce. I understand that missiles are sexy in some sense. People love to be scared. People love to pay attention to the news when it doesn't require any work. But if you strip all of that out, if none of that occurs, the fact is that oil prices will be higher for longer, consequence of a material underinvestment in sustaining capital investment and new project investment. I know that's a very unsexy response. It's one about money. I absolutely consider it a buy. I have it as a 4. If you are a believer that Prime Minister Trudeau will be thanked and excused in the next Canadian federal election, I don't know how to handicap that. If you believe that, then Birchcliff and Peyto are both 3s. Canadian natural gas is unnecessarily and in fact stupidly depressed in price as a consequence not of world markets, but rather as a consequence of the idiocy of Canadian leadership. They're as bad as our leadership is, which is saying something. But we have in the United States much better infrastructure now than they have in Canada. So if you believe that the political landscape in Canada will change, then both Birchcliff and Peyto's are 3. I don't know how to handicap that, so they have them as 4s. I'm long Largo, and I'm long vanadium, doing as much work as an old Luddite like myself can do around uses for vanadium, including the vanadium redox battery. I'm paying particular attention. Let me rephrase that. I'm very aggressively debriefing engineers who know a lot more about power storage than I, and about the efficacy of vanadium redox batteries in the utility scale storage market. Liking what I hear, but I don't know enough yet to make a simple declarative statement.
In this brief glimpse into the complexities of the oil and gas industry, we've uncovered insights from Rick Rule on the potential impact of geopolitical tensions on market dynamics. As we navigate through uncertain times, it's crucial to understand the interplay between geopolitical risks and economic fundamentals. Stay tuned for more illuminating discussions on the ever-evolving landscape of global energy markets. Don't forget to like, share, and subscribe for future updates. Thanks for watching.